What if I told you that a $20 billion deal in the Arctic almost reshaped the future of North America? And then, at the last second, Canada walked away. Not from a small private investor, not from a routine infrastructure proposal, but from China. And what Canada's government saw behind that money might surprise you. This wasn't just about ports or pipelines. It wasn't just about trade. It was about control, leverage, and long-term power in one of the most strategic regions on Earth. And today on Canada Global Economics Now, we're breaking down why Canada said no, what China really wanted, and what this reveals about the new global economic battlefield forming in the Arctic. Before we go deeper, if you care about Canada's future, global trade shifts, and the real economic power moves happening behind closed doors, make sure you hit like and subscribe right now. It helps the channel grow, and it tells YouTube you want more serious, in-depth analysis like this. Now let's get into it. To understand why this $20 billion Arctic proposal became so controversial, we need to zoom out. The Arctic is no longer just ice, snow, and polar bears. It's becoming one of the most valuable geopolitical zones in the world. As temperatures rise and ice melts, new shipping routes are opening. Routes that could cut travel time between Asia, Europe, and North America by thousands of miles. That means cheaper shipping, faster trade, and massive strategic advantage. Countries know this. The United States knows it. Russia definitely knows it, and China knows it too. Even though China is not an Arctic country, it officially calls itself a near-Arctic state. In 2018, Beijing released its Arctic strategy and made it clear it wants a role in the region. It has shipping lanes, energy projects, and infrastructure networks, and it wants that role long-term. Now, here's where Canada comes in. Canada controls one of the largest Arctic territories in the world. The Northwest Passage runs through Canadian waters. There are untapped oil, gas, and rare mineral reserves beneath Arctic land and seabed. There are potential deepwater ports that could transform northern trade. For any global power thinking, 20 or 30 years ahead, Canada's Arctic is not just land, it's leverage. So, when Chinese state-linked companies showed interest in investing billions into Arctic infrastructure projects in Canada, it wasn't random. Reports and policy discussions over recent years pointed toward proposals involving port facilities, mining projects, research stations, and potential transportation corridors. The price tag? Around $20 billion in combined long-term investments and financing structures. On the surface, that sounds attractive. Northern communities in Canada need infrastructure. Building ports, roads, and energy systems in the Arctic is extremely expensive. Private Western investors are often hesitant because returns take decades. So when a country like China shows up with capital, engineering capability, and long-term financing, it can look like an opportunity. But Canadian policymakers didn't just see opportunity. They saw risk. To understand that risk, we need to talk about how Chinese overseas investment often works. Under initiatives like the Belt and Road Framework, China finances large infrastructure projects around the world. Ports in Africa, railways in Southeast Asia, energy projects in Latin America. Officially, these are win-win economic partnerships. But in some cases, countries that struggled to repay loans or manage agreements found themselves under heavy Chinese leverage. The most famous example is the port in Sri Lanka, where control of a major port was leased to a Chinese company for 99 years after financial pressures mounted. Whether you call it debt trap diplomacy or simply aggressive strategic financing, the pattern raised red flags globally. Now imagine something similar happening in Canada's Arctic. No, we're not talking about Canada defaulting on loans. Canada is a G7 economy. But long-term strategic assets, especially in remote regions, can slowly shift influence. If a foreign state-linked company builds and operates a deepwater Arctic port, who controls data flows? Who controls access priority? Who influences security conditions? What happens if geopolitical tensions rise in the future? That's when the Arctic stops being just an economic question and becomes a national security question. In recent years, Canada has increased scrutiny on foreign investments, especially those involving critical minerals, telecommunications, and infrastructure. Under Canada's Investment Canada Act, deals that may harm national security can be reviewed and blocked. And that OS exactly what started happening more frequently when Chinese state-linked entities tried to expand their footprint in sensitive sectors. The Arctic sits at the intersection of energy security, military strategy, and future trade routes. The region is also closely tied to Canada's partnership with the United States, through NORAD, the North American Aerospace Defense Command. Any large foreign presence in Canada's north has implications beyond economics. From Ottawa's perspective, allowing major Chinese-backed infrastructure in the Arctic could complicate defense cooperation with Washington. It could also create long-term intelligence vulnerabilities. Even research stations can raise eyebrows if dual-use technology is involved. So when discussions about large-scale Chinese Arctic investments gained traction, Canadian officials had to ask a difficult question. Is short-term capital worth long-term strategic exposure? The answer, increasingly, has been no. But here's the deeper layer most headlines miss. Canada walking away from a $20 billion opportunity isn't just about China. It reveals a broader shift in global economics. We are entering an era where capital is no longer neutral. Money now comes with geopolitical alignment attached. In the 1990s and early 2000s, globalization operated under a different mindset. Trade was trade. Investment was investment. If a company wanted to build something and it created jobs, that was usually enough. But today, supply chains are weaponized. Technology standards define alliances. Infrastructure determines military reach. The Arctic amplifies all of this. Russia has heavily militarized its Arctic coastline. It has built bases, icebreakers, and missile systems. The United States is increasing its Arctic presence as well. And China, while geographically distant, has been investing in Arctic research, icebreaker fleets, and partnerships with countries like Russia to access northern shipping routes. If Canada had allowed massive Chinese-backed Arctic infrastructure, it could have shifted the strategic balance in subtle but powerful ways. Even if everything was commercially structured, the political leverage would be real. And there's another factor: rare earth minerals and critical resources. The Arctic region holds deposits of minerals essential for modern technology, including those used in electric vehicles, renewable energy systems, and advanced electronics. The global race for critical minerals is intense. The United States and its allies are actively trying to reduce dependence on Chinese supply chains. Allowing Chinese state-linked firms to gain influence over Canadian mineral extraction in the Arctic would run directly against that strategy. So what looked like a $20 billion infrastructure boost started to resemble a potential strategic vulnerability. That's why Canada's response wasn't dramatic headlines. It was something quieter but more powerful. Regulatory friction, national security reviews, tightened foreign investment rules, and clear signals that sensitive Arctic assets are off limits. This decision also sends a message beyond China. It tells global investors that Canada's Arctic is not simply an open marketplace. It's a strategic zone. And here's where it gets even more interesting. Walking away from Chinese capital means Canada must find alternative partners. Arctic development doesn't stop just because one investor leaves. If Canada wants to assert sovereignty, strengthen northern communities, and build infrastructure before other powers expand influence, it needs funding. That likely means deeper coordination with the United States, Europe, Japan, and other aligned economies. It may mean public-private partnerships backed by allied capital instead of state-driven financing from geopolitical rivals. It may also mean slower development, but with tighter control. So in reality, Canada's decision wasn't just a rejection, it was a strategic alignment choice. And that choice reflects something bigger happening globally: economic decoupling. The world is slowly dividing into economic spheres of trust. Technology networks, semiconductor supply chains, rare earth processing, 5G systems, even energy grids are being structured around political alliances. The Arctic is becoming part of that divide. For viewers in the United States, this matters more than you might think. The Arctic is not a distant frozen land. It's a future shipping corridor. It's a potential military theater. It's a resource vault. And it sits directly above North America. When Canada walked away from that $20 billion Chinese Arctic engagement, it wasn't just protecting territory. It was reinforcing the idea that North America or its northern frontier will not be shaped by outside powers without scrutiny, but the story is far from over. Because China isn't retreating from the Arctic. It's adapting. It's strengthening ties with Russia's northern roots. It's investing in Arctic research. It's building ice-capable vessels. And it's playing a long game. So the real question becomes, can Canada and its allies move fast enough to develop the Arctic on their own terms? In the next part, we're going to break down how Arctic shipping routes could completely reshape global trade, why Russia's dominance in the region complicates everything, and how this quiet standoff could impact energy markets and supply chains over the next decade. Now let's go deeper, because this is where things become serious. The Arctic is not just ice anymore, it's becoming a trade corridor, and trade corridors shape empires. For decades, global shipping has relied on routes like the Suez Canal and the Panama Canal. These routes are efficient, but they are vulnerable. One blockage can freeze billions of dollars in trade overnight. We saw that clearly in 2021 when global supply chains stalled. Now imagine a northern route, above North America and Russia, cutting travel time between Asia and Europe by up to 40%. That's not a small improvement. That's a major economic shift. Russia already controls much of the northern sea route along its Arctic coast. It has built ports, military bases, and one of the largest fleets of icebreakers in the world. Moscow sees the Arctic as a strategic highway. China understands this. Even though it's not an Arctic nation, it declared itself a near-Arctic state. That wasn't random language. That was strategic positioning. So when China showed interest in investing billions into Canadian Arctic infrastructure, it wasn't just about business. It was about optionality. It was about influence in a region that could define future trade. Now think about Canada's position. Canada controls the Northwest Passage. If Arctic ice continues melting, this route could become commercially viable for large ships. But infrastructure is weak. Ports are limited. Emergency response systems are thin. Development would require billions. So when Chinese capital appeared, it looked tempting. But here's the problem. Infrastructure isn't neutral. Whoever builds it shapes it. Whoever finances it influences it. Ports collect data. Shipping lanes create leverage. Logistics hubs can become strategic nodes. And Canada had to ask itself one hard question. If China builds major infrastructure in the Arctic today, what happens 20 years from now if geopolitical tensions rise? This isn't paranoia. This is modern geopolitics. Under initiatives like the Belt and Road Framework, China has financed ports and infrastructure across Africa, Asia, and Europe. In some cases, those investments created long-term leverage. Not always dramatic, not always hostile, but influential. Canada didn't want that scenario in its most sensitive region. There's also the defense factor. Canada and the United States operate together through NORAD to protect North American airspace. The Arctic is central to that defense system. The shortest routes for missiles or aircraft between major powers often pass over the Arctic, so any large foreign-backed infrastructure in northern Canada automatically becomes a security question. Even if the project is purely commercial, modern infrastructure involves data networks, satellite links, and digital systems. Those systems can have dual uses. And in an era of strategic rivalry, governments don't ignore that risk. So Canada tightened investment reviews. It increased scrutiny on state-linked foreign investors. And quietly, the door began to close. Now here's the bigger shift. This isn't just about China. This is about the end of economic naivety. 20 years ago, global trade was treated as separate from national security. If investment created jobs, it was welcomed. But today, supply chains are strategic assets. Ports are strategic assets. Rare minerals are strategic assets. The Arctic contains untapped oil, natural gas, and critical minerals. These minerals are essential for electric vehicles, batteries, renewable energy systems, and advanced defense technologies. The United States is actively trying to reduce dependence on Chinese mineral processing. Canada is a key potential partner in that strategy. Allowing Chinese state-linked firms to gain influence over Arctic mineral development would directly contradict that alignment. So Canada made a choice: short-term capital or long-term strategic control, and it chose control. But that choice creates pressure. If Chinese money isn't funding Arctic development, then who is? Canada cannot leave its northern territory underdeveloped forever. Sovereignty isn't just about maps, it's about presence. That likely means deeper cooperation with the United States, Europe, and Japan. It means allied capital instead of rival capital. It may mean slower progress, but more strategic stability. Meanwhile, China isn't retreating. It's strengthening partnerships with Russia in the Arctic energy sector. It's investing in ice-capable ships. It's playing a long game. So the Arctic isn't cooling down geopolitically. It's heating up. And Canada's walkaway moment is just one move in a much larger global shift. In the final part, we're going to talk about what this means directly for Americans. Your economy, your energy prices, your national security, and whether this Arctic standoff is just the beginning of a much bigger realignment. Now, let's go deeper, because this is where the story becomes bigger than just Canada and China. The Arctic is quietly transforming into one of the most important economic corridors of the 21st century, and whoever shapes it early will influence global trade patterns for decades. For centuries, global shipping has depended on routes like the Suez Canal and the Panama Canal. These are choke points. They are efficient, but they are also vulnerable. When the Suez Canal was blocked in 2021, global trade slowed instantly. Billions of dollars were delayed. Supply chains were shaken. That moment showed something very clear. Global trade is fragile. Now imagine a future where ships from Asia can travel to Europe by going over the top of the world instead of through crowded southern lanes. The Northern Sea route, running along Russia's Arctic coast, can cut travel time between Asia and Europe by up to 40% in some cases. That means lower fuel costs, faster delivery, and competitive advantage. Russia already controls most of that route. It has invested heavily in icebreakers, Arctic ports, and military installations. Moscow sees the Arctic as a national priority, but Russia's dominance creates tension for Western countries. If the Northern Sea route becomes the primary Arctic shipping lane, then Russia gains enormous leverage over global trade. This is where Canada's Northwest Passage enters the conversation. Unlike Russia's route, which runs along a single country's coastline, the Northwest Passage weaves through Canadian Arctic waters. Canada considers it internal waters. The United States views it as an international strait. That legal debate alone shows how sensitive the region is. If climate change continues reducing sea ice, the Northwest Passage could become commercially viable for larger vessels. But infrastructure is minimal, ports are limited, search and rescue capacity is thin, Navigation systems need upgrades. Development would require massive investment. And that's exactly why Chinese capital was so strategic. If China had gained a strong position in building Arctic ports or logistics hubs in Canada, it could have positioned itself as a key player in a future North American Arctic trade corridor. Not just a user of the route, but a builder of the system. For China, this would align perfectly with its broader global trade strategy. Beijing wants diversified routes. It wants alternatives to US-controlled sea lanes. It wants resilience in case of geopolitical conflict. The Arctic offers that. But from Canada's perspective, allowing China to help shape Arctic infrastructure could create long-term dependence. Infrastructure isn't just concrete and steel. It defines who sets the rules, who manages access, and who benefits from future growth. There's also the defense dimension. Canada and the United States operate jointly under NORAD to monitor airspace and defend North America. The Arctic is central to that mission. In the event of conflict between major powers, the shortest missile and aircraft paths between continents often pass over the Arctic. This is not hypothetical. Military planners on all sides understand this geography very well. If large-scale Chinese-backed facilities were operating in the Canadian Arctic, even under commercial agreements, security agencies would worry about surveillance risks, dual-use technology, and data collection capabilities. Modern ports are digital. They collect shipping data, cargo information, and vessel movement patterns. In an era of strategic competition, that data is valuable. And it's not just about military hardware. It's about digital infrastructure. Arctic development increasingly involves satellite systems, undersea cables, and advanced communications networks. Whoever builds and maintains these systems can potentially influence or access sensitive information. That's why Western governments have become far more cautious about foreign technology providers in critical infrastructure. So when Canada walked away from major Chinese Arctic involvement, it wasn't rejecting development. It was choosing control. But that choice comes at a cost. Building Arctic infrastructure without large-scale foreign capital is expensive. Northern construction costs can be several times higher than in southern cities. Harsh weather, limited labor pools, and logistical challenges increase expenses dramatically. If Canada wants to develop its Arctic independently or with allied support, taxpayers or private investors from friendly nations will need to step up. This creates a strategic dilemma. Move too slowly, and other powers expand their influence in the region. Move too quickly with the wrong partners, and long-term sovereignty could be diluted. Meanwhile, China continues to strengthen Arctic partnerships elsewhere. Its cooperation with Russia has grown in energy projects in the Russian Arctic. Chinese companies have invested in liquefied natural gas facilities along Russia's northern coast. That gives China access to Arctic energy resources without directly confronting Canada or the United States. So in some ways, China doesn't need Canadian ports to remain active in the Arctic. It can work through Russia. But that alignment creates another layer of complexity. If Russia and China deepen cooperation in Arctic shipping and energy, Western countries could find themselves strategically outmaneuvered in northern trade corridors. This is why Canada-AS decision signals something broader. The Arctic is no longer a peripheral region. It is central to future power competition. Let's talk about energy. The Arctic is believed to hold significant untapped oil and natural gas reserves. As global energy demand evolves, and as countries attempt to balance fossil fuels with renewables, Arctic energy remains part of the long-term calculation. Canada has historically been an energy powerhouse, especially in Alberta, but the Arctic represents a frontier that is both promising and controversial. Environmental concerns are serious. The Arctic ecosystem is fragile. Oil spills in icy waters are extremely difficult to clean. Indigenous communities depend on stable environmental conditions. Any large-scale development must balance economic growth with environmental protection. China's involvement in Arctic energy projects elsewhere shows that Beijing is thinking long-term about resource security. Energy diversification is critical for China's industrial base. If Canada had opened the door to large Chinese energy partnerships in its Arctic territories, it could have given Beijing additional influence over North American resource flows. For viewers in the United States, this has direct implications. Energy markets between Canada and the US are deeply integrated. Pipelines, electricity grids, and fuel supplies cross the border daily. Strategic shifts in Canada's resource control affect U.S. energy security. That's why Washington has quietly supported stronger screening of foreign investments in critical sectors across North America. The U.S. has its own investment review system through CFIUS. Canada has tightened its own rules in recent years. There's increasing coordination. This isn't about hostility, it's about alignment. And here's something important. Canada's walkaway moment also sends a message domestically. It tells northern communities and Indigenous governments that Arctic development will be shaped through Canadian-led frameworks, not foreign state-driven agendas. That matters politically. Sovereignty in the Arctic has always been a sensitive topic in Canada. Public opinion strongly favors maintaining control over northern waters and resources. So the decision strengthens Canada's internal narrative. The Arctic is ours to develop responsibly and strategically, but the global chessboard keeps moving. As ice melts faster than expected in some regions, the timeline for commercial Arctic shipping may accelerate. Insurance companies, shipping firms, and energy corporations are watching closely. If Arctic routes become reliably navigable for longer periods each year, economic incentives will grow quickly. The question is not whether the Arctic will become more important, it's how fast and under whose influence. China's $20 billion interest in Canada's Arctic wasn't charity. It was a strategic probe. It was an attempt to secure optionality, a foothold in a region that could redefine trade routes and resource flows. Canada's refusal signals that Western nations are becoming more cautious about mixing infrastructure with geopolitical rivals. This reflects a broader economic trend. Globalization is being reshaped by national security logic. Trade still matters. Investment still matters. But now, every major deal is evaluated through a strategic lens. Who benefits long term? Who gains leverage? Who controls data? Who sets standards? The Arctic magnifies these questions because it's still in early development stages. Decisions made today will shape power structures decades from now. And here's the big strategic tension: cooperation versus competition. The Arctic Council, which includes Arctic states, was originally built on cooperation, environmental protection, scientific research, and peaceful development. But geopolitical tensions, especially after Russia's actions in recent years, have strained that cooperation framework. Trust is lower. Military presence is higher. So when China signals interest in Arctic infrastructure, it's not entering a neutral space. It's stepping into a region already loaded with strategic sensitivity. Canada-OS response tells us something important about the future. North America is preparing for a more divided global economic order. The age of naive globalization is over. The age of strategic alignment is here. And that brings us to the final and most important question. If Canada says no to Chinese capital, if Russia deepens Arctic militarization, and if the United States seeks tighter coordination, what does the Arctic look like in 10 or 20 years? Will it become a new zone of cooperation, or the next major frontier of global rivalry?